To discuss how safe is the safe haven asset, is there still more leg room to go, what's driving the confidence, and a lot more, I'm being joined by Naveed Tamani, Group Senior VP, Head of Commodities Research at Motilal Financial Services. Welcome, Naveed. Thank you so much for joining us in this conversation. My first question to you would be, where are we currently positioned in this rally that we have seen in gold? Is it already done, or there's more leg room to go?
Well, thank you for having me on the show. And as you mentioned, that safe haven, is it still a safe haven or is it a kind of a return generating asset? The question is the latter one, because over the last 4 years, we've seen gold prices run up by closer to 100%. For the last 1 year, closer to about 45% on the international front and closer to about 50% on the domestic front. So this has taken a lot of investor into surprise, and most of the participants who have been part of the rally are pretty comfortable. But a lot of FOMO is developing, and people want to participate in this rally, which could they expect to extend toward 3,500, 3,700, and probably on the domestic front prices to touch even 1 lakh rupees. But as you asked, where are we at this point? I think most of the tariff related concerns or the development which has led to the last leg of rally is already into the price. We were bullish until 3150 $3,200, but as of now, we are sitting on the sideline and waiting for some clarity over how this thing is going to unwind with China, with other parts of the world.
Good afternoon, Naveed. Mihika joining this side. You spoke about how a lot of the tariff uncertainty is priced in, but if the past 2 months have been anything that's not uncertain, so do you feel a lot of this rally has happened because of uncertainty? Once that maybe dies down, which is what you're seeing right now, at least for the next 90 days or so, do you feel you could see a slight correction in gold, or other fundamental factors that could keep the rally moving?
Well, a lot of fundamental factors are already in the price, and it is largely that the exuberance that you're seeing is related to tariff, and the recent one being connected to what is happening on the bond yield front, because we've seen bond yield swinging from as high as 4.4% for the 10-year to 3.67%, and now back to about 4.5%. So what typically is happening is a lot of international central banks are selling US Treasury or dumping US Treasury, as Japanese central bank is a big holder of these bonds. US Chinese central banks are big holders of these bonds. Out of the 750 billion worth of holding, they've offloaded about roughly 50 billion worth of holding. Same goes for Japan. So these kind of central banks kind of want to dump the holding. This is one of the pressure tactics they are using to fight the tariffs which are being imposed on them, because US has got a massive debt servicing problem, and if this problem has to be handled, then bond yield have to come lower. So with this kind of bond yield, it is very difficult for the US to survive, say, in the current macro environment, and this is going to lead to higher inflation as well as a slowdown in the rate cut process which US was banking on for the year 2025. So all in all, positives are largely into the prices. What we are seeing is a little bit of exuberance. What we are seeing is a little bit of macro fundamental being changed, but this will come to a standstill. Two, three big players which are involved in the tariff come and sit on the table and discuss the way forward. It will happen 5 days from now, 50 days from now. We have no clarity. But whenever that starts to happen, you will see a reasonable to healthy correction in gold prices.
So what is your current target? Because you're saying a lot of factors are already priced in, and right now there's just a lot of uncertainty that has led to the rally. So what are your target levels? Do you feel that like you said, you might see a correction, and what would be a good buying point for an investor who wants to get into, because you don't want to get into at a peak, right?
Absolutely. So we were anticipating 3150 $3,200 for the by the end of 2025, but that has happened in the first quarter of 25. So now what do we do for the rest of the year? I would probably wait for a reasonable dip, and by dip I would mean at least 8 to 10% correction is where we see comfortable levels to buy gold once again, because we've seen a correction coming into silver, correction coming into base metals, into energy prices, just by mere news of there is going to be tariffs on China. But this has led to upside in gold prices. But the similar situation can happen in gold. The kind of correction can come into gold also once you have a settlement, or once you have a clarity over how these things are going to unwind. In the last year, 2018, also we saw a tariff war between China and US, which took about 1.5 year to unwind to very large extent. If that is the kind of quantum rate we are looking at, I'll not be surprised to see gold prices at 3,300, $3,500 or over 1 lakh rupees on the domestic front also. But I will be happy to miss that last leg of the rally. But if investors want to buy gold for a medium to long term perspective, wait for a correction towards say 80 to 85,000 or at least 10% from current level for an upside target towards 1 lakh and above.
So Navneet, just for a slight correction, 8 to 10% correction is what what you want for gold to be at an attractive buying level. Any 2-3 factors that we need to watch out for that could lead to that, correction?
Well, we've seen dollar index under severe pressure. It was 106, we say at the start of the last month, and it is now, as we speak, it's closer to 99. So dollar index is kind of at a level where we have not seen it for the last 7-8 years. So my sense is that another 150 basis point is where I see max fall in the dollar index, and then it will start to rebound. Second factor is that if US decides to cut rate, come what may, given the backdrop of macros, keeping that aside, and if they decide to cut rates, that can also be a trigger where you will see a pause in this run up. And third factor, the third largest factor is a settlement calendar or table which is on place with US, with China, with US, with Russia, and the rest of the world where massive tariffs have been imposed. So if this kind of clarity emerges, then the 8 to 10% correction could be in a very short span of time. But for investors, once prices come down crashing, they will again be confused that whether to invest or not. My sense is that you could start to invest into tranches if you have a reasonable correction in prices. At these levels, if you have a 5 year horizon, then it makes sense to be invested. If you have a very tactical or a short term view, probably any rally from here towards 93,000, 95,000 is somewhere the levels where you should be looking to book profit in your existing investment.
So, we've covered the correction triggers, but, you've seen central buying, which is still, going strong, even as per your February report. And their Fed rates, there is some uncertainty of the rate cuts, but, even US President Donald Trump has stated that he wants lower rates. And these are generally triggers for the price uptick. So how does that come into play?
Well, central banks have been moderate buyers. They've not been very, very aggressive. China, something like China, who was in a zone of 2021 or maybe before that in the zone of buying, say anywhere between 600 to 1,000 tons worth of gold, is buying about 12 to 16 tons worth of gold. So the quantum has gone down very significantly, and at such high levels, most of the central banks will probably are in a position that if there is a bargain buying on the table, then it is worth it, but otherwise they're not very, very aggressive. So smaller quantities are definitely getting added, but the chunk that we are used to seeing as central bank buying is no more the scenario. As far as rate cuts are concerned, your question to rate cuts is definitely a factor of treasury yields coming down, as well as inflation being moderate. With these kinds of tariff, inflation cannot be moderate, they have to blow up. With these kind of tariff, growth slowdown is inevitable. So these two factors are at play. Ideally, there shouldn't be any major question of rate cuts in the near future. But as President Trump has it, if he has used some pressure tactics and probably pressurizes for a rate cut in the near future, then that could be a knee-jerk reaction to kind of decouple the current momentum in gold prices.
Now, Neet, last question. I know we're speaking on gold, but silver is also something that saw a strong uptick, last year. And it did so in the start of this year as well, but the corrections come in. Do you think it would be better to buy into silver right now, or is gold still more attractive in terms of, your returns versus silver?
Oh, absolutely. Silver is giving par returns with gold in the year 2024. But as the start of the year 2025, also they were pretty much in hands in glove. But ever since these tariffs have been imposed on China, silver typically is largely an industrial metal today, more than a precious metal. So everything came down crashing. Prices corrected by about 17% from peak on the international front, and on the domestic front also 1 lakh 2,000 came down crashing towards 85,000 levels. Off late, they have seen a reasonable bounce of about 10% from low. My bet is that silver is a better bet. We will see levels of 1,10,000 and 1,25,000 in the next 12 to 18 months. But mind you, silver is a volatile asset. Silver typically is not for investors who are looking for fixed asset kind of a return. So something like gold is typically a safe haven buying, but silver is a naughty one. It keeps you volatile. So a tactical investment between mix of gold and silver can be done, where a larger component today can be done in silver, given the price correction that we've seen in anticipation of 15% upside toward 1,10,000 rupees.
Okay, thank you so much for your time, Naveed Tamani, and we definitely appreciate your perspective and clarity that you brought us on gold. And we will see you again, but thanks for that commentary.